So good morning, everybody. We're here for part two of our establishing and maintaining good credit presentation. Last week, let me go ahead and get this opened up for you guys. Last week we went over the credit report and some other topics on interest rates and a few quizzes and just showed you how a credit report looks. This week, we're gonna talk about more about how to manage credit and how to build your credit. So this topic of the module talks about successfully managing your credit. And so one of the keys to successfully managing your credit is to establish credit by securing a loan and or a credit card and to make payments on time. And just so you know that all lenders and creditors want to be sure that you are a good credit risk and that you will pay your bills on time. So that's like a recurring theme, right? I keep talking about pay your bills on time, pay your bills on time, right? Again, it's the number one thing that lenders and creditors look at. So when you guys start establishing your credit and start getting a credit history, that's the most important thing. And if there's one thing I want you guys to remember from this class, it is that you need to pay your bills on time, okay? So the way that you manage your credit and you demonstrate stability is knowing what's on your credit report and again, paying your bills on time, okay? You want to avoid taking loans and credit cards with high interest rates, and you don't want to take on monthly loans that you can't afford. So basically just living within your means, okay? And you don't, and also you probably won't get approved for certain loans if you don't have enough income and things like that. But you want to also resist impulse buying, which I know is hard, and you want to stay within your credit limit and track your credit charges throughout the month, okay? And you also don't want to let the total amount you charge to your credit card exceed 20% of your yearly net income, okay? So let's move this over so I can see better. What do you guys think? I'm going to ask a couple questions. So what do you think is the risk of using your credit card to purchase items you really can't afford? And you can either talk about this in the chat box or you can unmute yourself and answer the question. So what is the risk of using your credit card to purchase items you really cannot afford?
Not being able to pay back the charge.
Okay, I heard Jacob first, so go ahead, Jacob.
Not being able to pay back that charge.
Right. Kira?
It would be too expensive because you would need to pay your bills, and if you didn't have enough for both, you would be stuck in a situation.
Yes. Okay. And what do you guys think are some reasons why a bank would deny you credit?
Inability to pay bills on time.
Right. That's the number one answer. What else? We talked about a couple just right now. Anybody? Okay. Some other things that they look at are irregular employment. So like if you have a job and you quit that job and you move to another job, say you stay 6 months at a job and then you go to the next job, that looks kind of flaky, okay? For lack of a better word. But a bank is going to look at it like that, okay? Because you're not having you're not showing stability, right? Another thing is not enough income. So if you're applying for a car or a house that you really can't afford and you don't have enough income to apply for that, you're going to be denied. And then just poor credit history. That's either not having enough established credit history or not paying bills on time, having negative impacts on your credit report. All of those things are reasons why banks will deny you credit. Okay. Okay, so just talking about a few terms before we get into this. So we've talked about a loan before, you know, that's money you borrow from a financial institution with a written promise to pay it back. And then the terms are the provisions, conditions, and requirements pertaining to the loan as stated in the loan agreement. And then as we're talking about why the bank would deny you or allow you to get credit from them is based on credit worthiness, right? So credit worthiness is the term used to describe the state or condition of an individual's overall credit. So individuals that have established credit and maintain a positive credit history are considered to be quote unquote credit worthy. And so there'll be an acceptable risk for the extension of additional credit based upon their ability and willingness to repay past and current debt obligations, okay? So if you're deemed credit worthy, then the bank is going to want to, extend that money to you, and they think that you're not too much of a risk to lend that money to, okay? So,
Miss Andy,
yes.
could you zoom in
Sure.
a little bit?
Sure, I will. Better?
Yes.
Okay.
A lot
So
better.
again, we keep talking about this. The primary considerations when it comes to extending credit is stability. Okay, whether that's your job, whether you have a bank account, whether you have enough money, whether you pay your bills on time, all those things are considered you being stable. Okay, so the way that you demonstrate that, we've already talked about employment history, your income history, the length of time that you've lived at your current address can show stability as well. And then owning a home and establishing and maintaining a savings account are also ways to demonstrate stability, okay? So earlier last week we saw the credit report, like an example of a credit report, but just to kind of go a little bit deeper into that on what's in your credit report. So some of the basics are that you want to review your credit report to ensure that all identifying information and accounts are correct, okay? Because there are mistakes on your credit report. And there's also your credit report, certain negative parts of your credit report, they can stay on your credit report for 7 to 10 years, 10 years being like cases of bankruptcy, okay? So the 7 years, if something hasn't been removed to your credit report and it's still having a negative action on your credit report after 7 years, you can ask the credit reporting agency to remove that, okay? So you want to review your credit reports from each of these 3 credit reporting agencies, which are Equifax, Experian, and TransUnion, at least once a year. And remember, you get 1 free credit report that you can be sent to you in the mail, and at least once a year, and that won't go against you as a hard inquiry against your credit report, okay? It won't bring your credit card score down is what I mean. And so also, if you applied for credit and you were denied, you can get a free copy of your credit report at that time as well, okay? So under the Fair Credit Reporting Act, or FCRA, the credit reporting agency that shows a mistake on your credit report must complete an investigation of your disputed items. So you can make a dispute. So say you use, just because a lot of people use apps, you use Credit Karma, or what's another one? I know we talked about one last week. What was it, Experian Booster or something like that?
Yeah.
Okay.
Yeah.
So if you're looking at your credit report on one of those apps and you see something that you want to dispute, you can actually dispute that right from the app, and it's going to send it to them. But you can also call these numbers that are there. You can go on those websites, and you can dispute items, and they have to provide the written results of the investigation within 5 days of its completion, okay? And like I said earlier, negative information stays on your credit report for 7 years, and if you have a bankruptcy or foreclosure, that can stay on your credit report for up to 10 years, okay? So again, you can contact any of those credit reporting agencies, and you can also get an annual credit report from annualcreditreport.com. And that web address is exactly like that, www.annualcreditreport.com, okay? So what happens if your credit report contains mistakes? Okay. So when we were talking about that investigation of disputed items, they have to do that investigation within 30 to 45 days, and then they have to provide that written result to you within 5 days, okay? And then that
What would happen? Sorry,
ahead.
what would happen if they went past the 5 or however many days you said? Could you like what would happen?
I mean, you can report them as well. If they're not giving you your information in a timely manner, you can report that. I would have to get back to you on the information on where you can report that if you want that information, but that can be reported. Okay.
Okay.
So if they're based on the dispute, if there was a change, and they need to include a copy of your credit report based on that dispute. So they have to show that they changed the information on your credit report if they agreed with you that this dispute was valid, and they have to remove it from your credit report, okay? And if you're in the process of applying for a loan and you see that there's, and you're disputing something, you need to let that lender know immediately about the incorrect information and let them know that you're disputing that, okay?
Okay.
Okay, so again, I know I'm pounding this, into your guys' brains, but pay your bills on time. So how you paid your bills in the past is usually the best indicator for how you'll pay in the future. For banks and lenders, that's what they're looking at. And then you need to pay at least the minimum amount required by the date your payment is due on your account or invoice. But remember, we talked about the percentages and if you're only paying the minimum amount last week, and how much more you end up paying at the end of your loan, okay? So it's actually better to pay the full amount you owe and only spend the amount that you can pay back monthly. But in order to not have a negative credit indicator on your credit report, you want to at least pay that minimum amount, okay? And then just again, making late payments reflects negatively on your credit report. And you want to contact your creditors to discuss payment options if you think you're unable to pay what is due. So if you're not paying your bills on time, trust that the creditors are going to be calling and calling and calling you, okay? And they're not only going to be calling you, they're going to be calling anybody that you put as a point of reference, because when you apply for credit or a loan, they're going to ask you for references. And so if you're not paying your payments on time, they're going to start calling your friends and family. And your friends and family are going to know you're not paying your payments on time and things like that. Did you have a question?
Yes. Okay. For my first question is, why do they need a reference for you? And then my second question is, calling you for what purpose?
To get their money. They're calling you to get your money, to get their money, okay, and make sure that you make the payments on time. They need points. They need every lender and creditor asks for references. They want to make sure that they are able to find you if they can't get their money, and they want to see if your references that you put down agree that you're credit worthy. Okay, and most times when you put somebody for a loan as a reference, they're going to say, oh yeah, I've known them for this long, they pay their bills on time, this and that, right? Even if it's not true. But say you have a friend or a family member that you've already applied for a lot of loans and you've put them on references and they're already getting calls from creditors and lenders, they might not be willing to say that you are able to pay those loans back. So, I mean, I think this ends up with either your credit worthiness, and it's all about your reputation as well, okay? So,
Hey, Sandy,
yes, ma'am.
so does that mean that they can refuse you a loan?
On a loan?
Yeah.
If what?
If like your credit history isn't worthy or something?
Yes, exactly. So if your credit history isn't worthy, they'll deny you that loan. but you applied for that loan, so you're still going to have that hard inquiry on your credit report. So that's going to drop your credit score even if you didn't get the loan. Okay? So that's why you don't want to be applying for all kinds of credit cards, 10 times a year or something like that. Okay? You want to, be staggered out with the things that you apply for. And again, remember I told you it's better to go to a bank that you already have a relationship with, get that credit, that loan, like a car loan or that mortgage loan, approved for already, so that when you go looking for a house or you go looking for a car, you already have that with the bank. And that's just going to make the process easier. They're not going to send out a hard inquiry to 10 different creditors, which is going to count against you for every single creditor that they applied to. Okay? So it's better for you to be proactive for that.
All right.
Okay? Does anybody else have any questions? You're welcome. So again, do not avoid, if you're late on your payments, try and make an arrangement with your creditors, okay? It's better to make that arrangement. They can maybe give you some kind of where they can just add the payment on the back end of your loan, okay? So that you're not having to make two payments. You get a little behind, you lose your job, something happens, there's a health scare, you end up in the hospital, you spend time away from work, things like this during COVID-19, not being able to bring income in. You want to work with your creditors to make sure that they know the situation and that they have programs that can help you, for you not to get so far behind and for them not to put that negative impact on your credit report, okay?
That's kind of I heard that you can apply for like I forgot what it's called, unemployment, and they can pay you.
Well, I mean, there is unemployment if you lose your job, but the problem is that millions and millions of people are applying at the same time right now. So it's very hard to get in. I have friends that have called the unemployment office 100 times a day trying to get in at this time, and it's just I don't want to say it's a mess, but it's it's just the system can only handle so many calls a day. So if that many people are calling at one time, you're not going to get in. I have friends that applied for employment insurance, unemployment benefits, and they had to call like at midnight in order to get in, and finally get accepted. So it's just a lot right now because there's just so many people without work right now.
Because a lot of like restaurants are closing. Like, did you hear that country club or that golf course on the news that closed permanently? Well, we know a lot of people who work there and lost their job because of that.
Yeah,
So,
it's a really hard time. It's a really hard time right now, and not just here in the United States, but all over the world. So we're going to get into this first knowledge check quiz. Maddie?
Yes, ma'am. Okay, guys, true or false, all right? Length of employment, stable income, length of residence, and savings of all help demonstrate stability. True or false?
do you want us to put on the chat so you can count it?
Sure.
No, just sure, and then just say it out loud so I can know that everybody answered.
Okay,
True.
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 So
Jacob,
you want us
right
to
into the chat
also put
also. Yes. Okay, so just like kind of going into this question, all right, you have to remember that if you're employed, have a stable income, have lived in the same location for a period of time, and have a savings account, this proves to lenders and creditors that you guys are stable and will repay the obligations on time, okay? So it's very important for banks to know that you're, you're just stable and you're able to pay your bills on time, just like Andy said. Miss Andy said, sorry. Okay, next question.
Okay.
True or false? If your credit report has errors, the law puts the responsibility on the credit reporting agency to conduct an investigation and correct any errors. True or false?
True.
True. Okay.
Jacob?
True.
Okay.
True.
There it is.
True?
Yes.
Okay.
Sorry, I'm being very slow today.
It's okay.
Good. Good. Has Dominic got on? No. Huh?
I don't think he's gotten on. Okay. So just remember that the Fair Credit Reporting Act, the FCRA, requires that any information collected by the credit reporting agencies must be accurate. Okay? So you have that option to dispute anything that you see that is not accurate.
Okay.
Okay. So applying for credit in your own name, right? When you guys get a little bit older, when you start applying for some credit, you want to establish credit in your own name so that you have your own credit history. And even with no income, having a separate savings, checking, and credit accounts will enable you to establish your own credit history. Okay, so it's good. The ones that already have a checking account, a savings account, you're already establishing your credit history. But remember, you don't want to be taking out money all the time out of a savings account. You don't want to be making impulse buys all the time. You want to be managing money of what you have because the bank looks at all of that history. You don't want to be having overdrafts, anything like that. You want to be keeping your accounts good, okay? And this might not completely apply to anybody, but maybe in life later, if you were married or divorced recently, hopefully not, and changed your name, you want to ask your creditors to change your name on your accounts, okay? So anytime you have any type of life change like that, you want to make sure that your name is correct on your credit report, okay? Did you have a question?
No, I had just thought of one, but no, I remember. I forgot. Never mind.
Okay. All right. And then another thing is if you share an account, go ahead.
Is there do you have any tips for is there a good way to does the bank help you save money? If you know what I'm trying to say.
Yeah, well, I mean, there's different types of savings accounts that you can have that have, different kind of interest rates. So different banks have different interest rates, different accounts have different interest rates. So you have to do your research and look at those banks and see, if you want to get a savings account or a cash on deposit, which are CODs, other types of savings accounts like that. So you want to see what's best for you. So if you have a savings account and you find a bank that has a better interest rate, that you're collecting interest on that savings account, then of course you want to go with that. But banks do have information online about, just tips on how to save money. A good policy is that any income that you have coming in, that you put 20 to 25% of your income coming in into a savings account every time you get your paycheck. Okay, and that's a good way to save money. So that's a good policy. But also,
Miss Sandy,
yes.
Can you build good credit by not using your account, or is that like a car where if you don't use it for a while it starts messing up or what?
Yeah, you do need to use your credit to keep your credit score going up or maintaining. If you're not using any type of credit, your credit score can go down.
Oh, okay.
Because Miss, I had saved quite a bit of money, and then I bought Air Forces and a video game, and I was already done. So I think I'm giving up on the mattress foundation.
Okay, good. We're convinced you. It only took 7 weeks. I'm glad, Robert. I'm glad. That's good. And then remember how we went through that other module and it talked about, researching 3 different banks and seeing what resources and benefits they are to you. So I would just suggest you go through that again and then figure out what's the best bank for you. Okay? And if you need any help with that, I can help you. Okay.
Okay.
So,
thank you.
You're welcome. So moving on. So if you guys share an account with family members, Creditors should report information about these accounts to credit reporting agencies under all names. That also includes, say you have a business partner, okay? Say you have a partnership business or a corporation where there's different people named on that, and you guys apply for credit together and you have a loan together and things like that. The credit reporting agencies should report that information under all names, okay? And then it's also important for you to have some control over the source of income used for repayment of loans you co-signed, okay? And we'll kind of talk about co-signing, okay? So. So following these guidelines, if you establish credit in your own name, know that you have your own credit history. And even with no income, having separate savings and checkings credit account, you'll enable to establish your own credit history. And then with credit cards, you need to oversee the card's use, okay? You want to make sure that others who have access to your card do not run up an excessive amount of charges that no one can repay, okay? So it's really important when you're working with a partner, a business partner, or even your wife or husband, you know, that you're having good relationships, that you're on the same wavelength of, you know, how you're going to manage your money and things like that, because, you know, financial and money is one of the number one arguments when you're in a marriage, okay? Because somebody wants to spend more, somebody wants to save more. So it's really good before you even get married to have those kind of discussions with somebody so that you're not in those kind of problems later and getting into financial ruin because of somebody else. Okay, so those are the kind of things you want to think about before and talk about before you marry somebody, before you get into a business partnership and things like that, okay? Because you don't want somebody ruining your credit because they can't handle their finances or don't have the information on that you guys are getting through this course, you know, to handle their finances correctly, okay? So we talked about having accurate information on your name. So if you change your name, and if you've had any accounts with family members, we discussed that. And then when we're talking about co-signing, okay, in my personal opinion, I don't always think co-signing is the best. But if you have somebody that you really trust and that you know has some credit worthiness, I mean, if you're in a partnership with a business, I would even go so far as to ask them for their credit report before you co-sign on anything, because then you're going to know what you're getting into before you do that, right?
Great.
So you're going to see their credit history, and if they have a history of defaulting on loans or anything like that, then you're going to say, you know what, I don't think that I want to risk my financial and information and my credit score and my credit report for you. Okay, so you need to really, you know, get a lot of information. And I know sometimes somebody's in a financial bind or something like that, but you have to put yourself first and make sure that you're not going to be left out in the cold in a situation and end up having to pay that loan on your own for somebody else's car or somebody else's loan that they want, because if you co-sign, you are going to be responsible for that, okay? So it's important. Go ahead.
What is it called when you can make your own money and your wife can make her own money and you guys don't have to share? What's that called?
You just have separate income.
Oh, I thought that was called something.
Well, you're just gonna keep your finances separate, and sometimes that's better for people. Okay. Sometimes.
Sandy,
Yes.
can I ask you a question to do with the homework?
Can we ask after the class?
Yes, ma'am.
Can you write it down and then let me know? And then after we finish recording, I'll answer those questions for you, okay?
Okay, thank you.
You're welcome. Okay, so sometimes like if you want to keep your finances separate, you want to have separate bank accounts, and that's a personal choice. But a lot of married couples, they keep a bank account together, and so that they're able to both pay bills off of that account or things like that. You can always have a separate account from your husband or wife to have separate money for anything like that. Those are all personal choices, okay? Those are all choices. I can't tell you which way to go with that. But that's a personal choice that you decide with the information that you have, okay? At the time.
Okay.
Okay. So again, if you co-sign for loans, it's important for you to have control of the source of income used for repayment. So here's an example. So couples owning a small business, we've already talked about that a little bit, such as a
My
professional.
parents. Oh,
Go ahead.
sorry. My parents own a small business. Well, I don't think it's not very small, but they both own a business together. So.
Okay, so they know
Yeah.
all about this.
Yeah.
So such as a professional practice are sometimes required by lending institutions to co-sign or guarantee the business loans, okay? So generally these loans are controlled by the spouse who operates the business, and the other spouse may have little input into the decisions affecting the company. But if the business fails and you have co-signed those loans, you must assume that you have shared responsibility for the repayment of the loans, okay? So let's look a little closer at this and the considerations that you got to keep in mind if you are asked to co-sign for a loan, okay?
Okay.
So again, co-signing can negatively impact your credit if the primary borrower doesn't repay the loan, okay? So it's a risk. It's a risk for you, okay? So as a co-signer, you are being asked to guarantee a debt. If the primary borrower does not pay the debt, you will have to pay, okay? And it will go on your credit report, and it can stay there for 7 to 10 years, okay?
Could you repeat what a cosigner is asked?
Can you say that again? I didn't hear you.
Could you repeat what a cosigner is asked? Like what are they asked to do, or what are they asked to sign? Just for reference.
So the cosigner, if you're just, so it's just like another person that's on that loan, okay? So you're basically responsible for that loan, the same as the primary borrower. Sometimes they ask you to co-sign on a loan because maybe you have a separate job and you have separate income, and that's going to allow you to have more of an income base on your loan so that you can be approved for that loan and be approved for that loan. Or maybe you don't have a history of credit. So say you're just building your own credit and you want to buy a new car, so you ask your parents to co-sign for you, but you're going to be making the payments. But if you stop making payments, your parents are going to be responsible for finishing paying that loan. Okay, so anytime you co-sign for anything, you need to understand that if that primary borrower stops paying, you're going to be responsible for that amount. You're both still responsible, but it's going to go on your credit history, and you and the creditors are going to come after you because you co-signed on that loan. So you're just as responsible as the primary borrower. Okay? Okay, so again, you may have to pay up to the full amount of the debt if the primary borrower does not pay. You may also have to pay late fees or legal or collection costs. Okay, so all of these things you're responsible if you co-sign. So you really need to make sure that the person that you're co-signing for is responsible, is going to pay that loan, and it's a risk. Okay, so you got to get all your information right. Okay. So just as a primary borrower, the creditor can use the same collection methods against you. They can take you to court. They can garnish your wages, all of that, if you're a cosigner, okay? So if you cosign for a loan, you ask the lender to agree in writing to notify you if a borrower misses a payment, okay? So that's very important because you don't want to be 3 payments missed in, like they missed 3 payments and you're barely finding out. Okay, you want to find out immediately so that if you have to make payments on that loan and to keep your credit intact, you know that, okay? So
Alright.
if you do decide to co-sign on a loan, you want to make sure that the lender notifies you immediately when there's a missed payment, okay?
What financial institution would be the best for co-signing, like most secure, regionally? Like what bank or what or bank, credit union, or thrift? Which one would be the best?
It just depends on what their rates are and things like that. You're going to try and secure the best loan at the best rate that you possibly can. The better your credit, the better interest rate you're going to get. There's not to say a financial institution that gives the best for a cosigner. It's really up to the cosigner to figure out if the person that you're co-signing with is responsible and financially responsible, and if you want to take that risk. So that's a personal choice. It's not to say that it's the
Okay.
bank, okay? Because you can
Alright.
co-sign on anything with any bank or any financial institution. It's really about you making sure that they are able to repay it and you're not going to be stuck paying that, okay?
Okay, I understand.
So I have a better definition for a cosigner. So a cosigner is a term used to describe an individual who signs a loan or credit application with another person and promises to pay if the primary borrower doesn't repay the loan. And if they don't repay the loan, it's called default, okay? They default on that loan. So a default is a failure to meet a payment or fulfill a credit obligation, okay? So just remember, if you co-sign, you're responsible for that loan just as much as the other person, the primary borrower is, okay? So that's a
Okay.
risk that you're taking, okay?
Alright. Yeah, that clears up what my
What you were asking.
confusion.
Okay.
Mhm.
All right. So, you just want to make sure that you know what co-signing involves. Before you pledge property to secure the loan, such as a car or furniture, you want to make sure you understand the consequences. If the borrower defaults, you could lose those items, okay? Because they sometimes ask for collateral in loans.
Okay.
So you don't want to lose your car or your house or
Collateral is like
jewelry.
compensation, right?
I'm sorry?
Collateral is like compensation, like in case
Collateral,
it's
yeah,
like
collateral is like is compensation for the bank. Okay? That means if they can't get their money back from you and you put that up as collateral, they can take that and then they try and sell that so they can get back some of their money.
okay.
Okay? So it's for them. Okay. So you want to ask your lender again to agree in writing to notify your borrower if they miss a payment. So that'll give you time to deal with the problem, to make back payments without having to immediately repay the entire amount. So again, you can work with the creditor to figure out, some kind of program. Sometimes they'll give you like a grace period of like a month or postpone your payment for a month so that you can get that money paid back. They have different types of programs depending on the lender, okay? And then you want to make sure you get the copies of all the important papers, such as the loan contract, the warranties, if you're co-signing for a purchase, okay? You want to make sure you have all of that. And then you, of course, want to stay in contact with the borrower to ensure that the loan is being repaid in full, on time, every time, okay? Because all that affects your credit, okay? So moving on to the next knowledge check, Maddie.
Yes, ma'am. If married, is it essential for blank partners in the relationship to apply for credit? One, both, or neither? What do you guys think?
One. Well, I think one.
I don't know, cause I want to say both.
I'm gonna go with
Both.
What did you say, Jacob?
both.
Yeah, I want to go both too.
Okay, Robert?
Both, miss.
Miss Maddie, what's the correct answer?
Okay, the correct answer is both, okay? Both partners in a relationship should establish credit to protect the family for unforeseen circumstances like death or divorce. Okay? You just don't want to have one person go through credit checks and establish a good credit. Okay? You both want to have good credit and establish that for your family just in case one of you dies or you guys get divorced, who gets what, things like that. Okay?
Okay.
Next question.
All right.
If you only co-sign on a loan, you are protected from negative credit ratings regardless of what the other person does. True or false?
False.
False.
Robert, Kira,
Here?
Yes, ma'am.
true or false?
True or false? If you only co-sign on a loan, you are protected from negative credit ratings regardless of what the other person does. True or false?
False.
Kira?
False.
Good, good. If you co-sign on a loan with a family member or friend, both parties are held completely responsible for the payment. If the person for whom you co-sign misses a payment, both of you will receive the same negative credit ratings, okay? So if you co-sign, you're just as liable as the other person, okay? So you have to really, if you're gonna co-sign, if you're gonna do somebody a solid, you have to be sure that they're trustworthy and they're responsible, because at the end of the day, you're gonna be just as responsible as they are, okay?
Yes, ma'am.
Okay, so moving on to the next portion of this module, we're going to talk about credit laws, okay? So this is protecting the consumer, okay? So these are protection laws for you, okay, that you should be
We
aware
got
of.
about like 4 minutes, okay?
Okay.
The
So the topic
consumer-
discusses the federal laws in place to protect a person's right to get and to use and to maintain credit. So you have the Equal Credit Opportunity Act, which prohibits discrimination in credit transactions. You have the Fair Credit Reporting Act that we talked about earlier, that is your right to know information that's distributed about you and the credit reporting agencies and requires the information to be accurate. We have the Truth in Lending Act, TILA, which requires lenders to give you written disclosures, the cost of credit and the terms of repayment before you enter into a credit transaction. And then you have the Fair Credit Billing Act, which is FCBA, which establishes procedures for resolving billing errors on your credit card accounts. And then you have the Credit Card Act, which requires notification before arbitrary rate hikes. So if they raise your interest rates or something like that, they have to tell you before. And so that eliminates universal default provisions and regulates fees that credit card providers can charge. And it also requires more disclosure about the impact of minimum payments and the availability of nonprofit counseling assistance, okay? So credit laws. Okay. So those are all the credit laws that are in place to protect you and to protect your right to get, use, and maintain credit, okay? We talked about this one already. We just went through this. Okay, so if you are denied, you've been denied credit, okay, what are your options? So if you're denied credit, you can obtain a copy of your credit report to find out why you were denied. And federal law requires a creditor that denied you a credit to give you the name, address, and telephone number of the credit reporting agency, okay? And then you want to contact the credit reporting agency within 60 days of receiving denial to obtain a free copy of your credit report. And usually when they send you a letter saying that they denied your credit, they're going to give you that option there and show and tell you exactly where to call or where to write to get that, okay? And then you just want to be sure that the lender or creditor will consider a non-traditional credit, ask the lender or creditor if they will consider a non-traditional credit file. And a non-traditional credit file is for people with no credit history or bank accounts, okay? So this is like when you're first starting out. Okay, and so we're at the end. Module conclusion, congratulations. you know, just some of the critical information of this module is you always want to mail your payments soon enough so that they reach the creditor on time, on or before the due date. You want to try and pay your credit cards in full each month, and if you can't, always pay more than the minimum due. You want to handle your bank accounts responsibly, avoid bouncing checks or overdrawing accounts, and you want to routinely check your credit report and report any errors to the appropriate credit reporting agency, okay? And then just know and understand your credit rights, okay? I'm going to go ahead and stop recording.